Stocks trade ranged near the critical levels amid growing concerns over high inflation and slowing growth. Auto and consumer discretionary stocks gain while metals and energy drag and mid-caps outperformed today.
The Vedanta stock dips after dollar bonds of parent Vedanta Resources takes a beating on concerns over its repayment ability given the government's opposition to the sale of select assets to Hindustan Zinc.
Zee Entertainment gains after NSE puts it back on the F&O list. A move by City Networks to move forward on debt resolution is also read positively.
Cipla slips following US FDA's 8 observations on its Pithampur facility, which is likely to push back the launch of its key respiratory drug Advair.
And Adani Enterprises sees a wild swing from losses to gains, even as several other group stocks like Adani Green, Adani Transmission and Adani Total Gas continue to get battered in trade. Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. So Pavitra, again, there is weakness in market at this point and the inflation and growth concerns globally is the one which is impacting the overall market trend as we have been seeing for past few weeks. So at the moment, Nifty 50 close to the low point of the trading session. In fact, if you really take at the levels, about 40 points down at 17,353 levels. When it comes to sensex, it's down by 175 points at the moment. Bank Nifty outperforming the key indices on the flat line with a negative bias at the moment and closer to the lower point of the trading session. When you talk about the mid-caps universe, well, they are much more resilient today and are showing a huge outperformance to the key indices, 0.82% higher in trade at the high point of the trading session. And that's the reason why the advanced decline ratio, because of the broader market participation and more green tick on larger number of shares, is being seen. So advances are the one which are the flavor of the session today at the moment. When we talk about some of the counters which are really helping the market, well, two Adani stocks in Nifty 50, Adani Enterprises as well as Adani ports have seen some surprise move in the intraday session today and have touched the high point of the trading session, and that's gaining momentum, really adding to Nifty 50, and 13% up on Adani Enterprises needs to be seen. But Vedanta on the other side taking a dip today, and some of the other counters from IT like TCS as well as banking counters really helping the market in a positive sense. Pavitra.
Oh, absolutely. But, you know, if you look at the sectoral indices, what's holding up the best today, perhaps, is some from the auto names, right? Remember, the auto sales are due starting tomorrow. So tomorrow and day after is when we'll get auto sales for this month. And on the back of that, you have a lot of these companies holding up. So whether it's an M&M, Bajaj, Tata Motors, Bajaj, of course, we've been telling you, saw a big cut yesterday. So it's making up a little bit of that. But this entire pack in focus ahead of that. A lot of the other auto-related companies, some of them are also included in the MSCI small cap index. There you have it on your screen. So something like a JBM Auto seeing a big jump. You have Ramkrishna Forgings, which is up 3%. What's also doing well today is some from the real estate pack. This sector has not been holding up well at all, but today you're seeing good moves come through. So I'd like to point that out. On the downside, Nisha's pointed out Vedanta, but that's just one of the metal counters. You have many more from there. The larger names will be up on your screen. You know, all of them looking weak once again, and some from FMCG. So ITC, HUL, Nestle among the larger names seeing some cuts. And of course, you know, Reliance being a little bit weaker in trade, of course, does not help our markets because of the sheer kind of weight that it has on the index. But that's what's happening in terms of stock-specific action. Let's begin by tracking some of these individual stories. Vedanta is tanking in trade as yields on parent Vedanta Resources bonds surge. Nigel is here to tell us more about this. Nigel?
Well, let's run you through the key data points. What's plaguing Vedanta Limited? That's the Indian listed entity. The fear is that Vedanta Resources, which is the parent, could potentially default. And that fear has come about because the yields, you know, on the bonds that are traded, they have moved up to around 35 to around 40% approximately. So that's the fear out there. And in the first half of this fiscal, that's FY24, they have maturities of close to around $900 million. So that's the fear out there. The second factor is, how does it impact the listed entity? Well, Vedanta Resources, that whole stake in Vedanta Limited, and the promoter entity comes up for you. The holding is large. The problem is most of it is pledged. So if in case the shares fall, the fear is that in fact, it could trigger some bit of selling. That isn't the case as of now, but that's the fear as we speak. So that's why, the stock is under pressure. Thirdly, the big, the most important trigger was Hindustan Zinc goes ahead and buys Vedanta's international zinc business for around $3 billion. Now, the government of India has, opposed this. So that $3 billion deal goes out of the window. Can they come up with some kind of solution where you get the cash out of Hindustan Zinc's books into Vedanta Limited and they in turn pay the money to the promoter entity? That's something we'll have to see. But for the time being, the fear is that Vedanta Resources, the promoter entity, could potentially default, which is further putting pressure on Vedanta Limited stock price. But I've seen this in the past, in the last many, many years. And somehow or the other, the promoter entity wriggles its way out of it. So let's see what cards they have up their sleeve, whether it's a refinance, whether it's pulling out some cash from Hindustan Zinc. We'll have to stay tuned, but that's the fear that's playing out.
Right, Nigel. So as you pointed out, in the last few decades, we've seen many such situations. Let's see how Vedanta tackles it. We can do a detailed analysis. In fact, watch out for that in our special digital offering, Who Moved the Market, at 2 p.m. today. All right, on that note, we'll slip into a short breather on Business Lunch. But up next, we get you a preview of the Q3 GDP numbers that will be announced later today. Stay tuned.
Welcome back. You're still tuned into Business Lunch. Let's now bring you some important domestic macro cues. The key one is that GDP for the third quarter, this is for October to December, will be announced today. And a CNBC-TV18 poll sees the Q3 GDP growing by 4.7%. So Lata is here to break down all of the numbers for us and tell us what we can expect. Lata?
That's right. It's expected to be 4.7%, the October to December growth. That compares with 5.4% in the same period last year and 6.3% Q2. But the important point is it's better than the 4.4% estimate which the Reserve Bank put out for the October-December quarter. Now, the first question that comes to the mind is, 4 point something, aren't we at least a 6 to 7% economy? What's this 4.7 all about? Now, actually, 4.7 is strong, stronger than even RBI, as you can point out. It's strong because the base last year, last October to December of 2021 was a very strong quarter. We were coming out of Delta, remember? We had a long period of practically not being able to do anything. So it's an extremely strong base as well, actually, if you look at Q3 of 2020. At that time also, we were coming out of a lockdown. So 2 strong quarters a year ago. And on that base, 4.7 should be considered good. If we do 4.7, actually, the real GDP, adjusted for inflation, would be about 40 lakh crore. And that will mean an almost 5% growth from Q2, which is huge sequential momentum. Imagine if you can run at a sequential momentum like that, you're talking about a 16, 17% annualized growth. So it's a good number, 4.7. Big contributor will be services. There's a big category which we call trade, hotels, transport, communication, and broadcasting. That's expected to grow 11 or maybe even 12%. And that's because, again, it's a low base. These are services sectors which suffered terribly the quarter before, that is the year ago in 21 and 20. So it's actually still recovering. Per se, if you compare it from 4 years ago level, this is still weak. But year on year, it's giving us a big bump up to the GDP. The other positives will be the services sectors, construction, and the utilities, power, gas, electricity, etc. Those will give in some 7 to 8% contribution. What won't work will be manufacturing, likely to be -2 or 2.2%. And that's because there's higher commodity prices, raw material prices impact, weak consumption, to some extent even internally, rural, even urban discretionary started declining towards December. Of course, export consumption was poor, so manufacturing won't help. Now, finally, this is the googly. They're going to revise the base, and they're going to revise 3 years of bases. They're going to revise 22, 21, and 20. You will get the first revised estimates of FY22, second revised estimates of FY21, and a third and final revision of the FY20 estimates. So if the base changes so completely, what are all our forecasts? They may go for a complete toss. It will take us a little while to judge whether the number we get is good or bad.
All right, Lata, thanks so much for giving us all the details. All eyes would be on the GDP numbers later today. Let's quickly slip into a short breather on Business Lunch, but don't go anywhere. Up next, we get you excerpts from our conversation with Carl Pei, who's the CEO of consumer electronics manufacturing company Nothing, all the way from the Mobile World Congress in Barcelona. Stay tuned. Welcome back. You're watching Business Lunch. Now it's time for a CNBC-TV18 exclusive. Well, sources suggest that the DGCI has sent notices to insurance brokers and intermediaries on dealings with the insurers. Timsy is joining in with all those important details. Tell us, Timsy.
Well, this time the Directorate General of GST Intelligence has actually sent notices to several insurance brokers and intermediaries for their dealings with insurers. Remember, this is a follow-up case because earlier DGGI had approached with similar notices to life insurers. 26 life insurers were under DGGI scanner, and now as a follow-up, the intermediaries to whom these commissions were paid by the insurers are now under scanner because these brokers and intermediaries actually have issued fake invoices to insurers, and that is what DGGI is probing these intermediaries and brokers for, because they say that they have issued fake invoices based on which insurers have actually taken fake ITC, and that is not as per the IRDAI norms. So let's see how soon this entire conundrum of insurers and insurance intermediaries and brokers ends with DGGI, because they tried to step in through the government, through finance ministry, to actually break this entire thing, because insurers feel that the current norms of a commission between 12 to 18% is outdated, and they are unable to sell their products because based on which they gave higher commissions to intermediaries and brokers. But government, especially the tax department, is very clear that this cannot be permitted, and that is why they are now under DGGI scanner for issuing fake invoices. This time, the Bangalore unit and Mumbai unit have sent these notices to almost about 100 such insurance intermediaries and brokers, including some of the majors, where the tax evasion quantum is over 100 crores also in certain cases. So let's see how soon this entire conundrum ends. But yes, as of now, notice of inquiry asked by DGGI to come and clearly show evidence in these matters that why they issued fake invoices. Back to you.
All right, Timsy, thanks a lot for getting us all of the details on this story. But with that, let's also bring you some from the gadget geeks out there. The Mobile World Congress that is currently underway in Barcelona hosted a number of senior executives from top global companies as well as trailblazing tech businesses. So on the sidelines of this event, our colleague Shibani spoke to Carl Pei, who's the co-founder of OnePlus, and he later, remember, moved on to establish Nothing, a consumer electronics manufacturing company, and began by asking him about the outlook for the tech market in India. So let's listen into that chat.
I'm very bullish on India and India's economy. I think this year it's going to grow by 6%, while large parts of the world are going to fall into a recession.
Sure.
I think the population is very young, so there's a lot more they can contribute to building the country and the economy. I think we have a great start in India. I was able to meet the Prime Minister recently on my trip, so I'm still really grateful for that, because in that meeting we were the only startup company. All the other companies were very established. So I think there's a affinity for our brand in the market already. So hope to build upon that. It's going to be an important market for us going forward. A lot of our manufacturing is already done in India.
Yeah, and you must have also met some of the Nothing community members while they're in the country. What do they say about the device, and what is their feedback? Because you must have definitely taken feedback and probably developing the next one basis that.
Yeah, we've taken a much more thoughtful approach to building our community. Like we had a meetup when I was in Bangalore with our community, but you have to have showed some kind of early faith in the company to have been invited.
As we hold our breath for the phone 2, what do we expect from the device?
So we haven't launched the product yet, but what can I say? It's going to be a more premium device for sure. Our engineering capabilities have vastly improved from before. So we're going to be able to do a lot more on the software side that we weren't able to do before.
So you are saying that it's going to be a more premium device. So does that translate to, or does that mean that it will compete with, you know, the Samsung Flip Folds or probably an S23 Ultras of the world? How is it going to be premium? Will it compete with the 13 Pro Max or 14 Pro Max on the iPhone?
I think our approach is to make our products more and more differentiated. So we took the first step with the Phone 1. The Phone 1 was quite different from other smartphones at that time. The Phone 2 will be even more different than smartphones at its time.
All right, let's take it to the big story here on Vedanta. Vedanta spokesperson has told us that they're comfortable on paying their debt, and Nigel D'Souza gets us all those important details. Tell us, Nigel.
Well, from the morning itself, the street has been worried that Vedanta Resources could go through a bit of a turmoil, and that's why we've been telling you that the yields have spiked up. So we here at CNBC-TV18 have reached out to them, and they've given us a statement that is flashing for you on the screen. The few highlights that they're saying is that they're in a comfortable position and they will meet the first half of the year's obligations. Because the query was that they have $900 million worth of debt maturities that are coming up in the first half of the year itself. So they are saying that we're in a comfortable position, we can meet that. They're looking at both refinancing as well as repayment using cash on the balance sheet. So how do they do that? There are two options, right? Either they refinance the current debt that's coming up or they use the cash to repay it. So they are saying that, in fact, they believe that this can be done. They're also highlighted that they have close to $2.5 billion worth of cash, and they're in a position to generate more money. So that's about their cash position. And in terms of default, the query was whether or not they're going to default. For the time being, the bond yields are indicating that maybe, in fact, there could possibly be a default. And that's where the yields have moved up and the bond prices have moved down. But they are saying there's no question. And also in the pledge holdings, they're saying that, circa 6.8% Hindustan Zinc shares. Other holdings are not pledged. That's their clarification. And they've also said there is no risk of any selling because the fear is the bond yields are moving up. Most of the promoter holding in both the entities, Vedanta Limited and Hindustan Zinc, is pledged. So will that hit the market? But this is the clarification we are getting here. And the Vedanta Group spokesperson, well, they have given this out to CNBC-TV18 exclusively. So we just thought we'll highlight this for the viewers. But we'll have to keep an eye out on these maturities and how exactly they go ahead and meet these debt maturities. So we just thought we'll bring that for our viewers.
All right, Nigel, thanks a lot for getting us all of those important comments. These are the first reactions that we do have from the Vedanta spokesperson who is clarifying on, the kind of queries that we had sent them. The stock slightly off the low, of the lows, but not too much at all. It's still a 5.5% kind of cut that we are seeing on Vedanta. But on that note, we're going to wind down on this edition of Business Lunch. Thank you guys very much for tuning in. Midcap Radar comes up next to take all of this action forward.